Good morning, everyone. Here's your market update for 2nd of December. So, starting with the US dollar, the index hovered near 99 on Monday, close to a 2 week low, as markets positioned for what could be the final Fed rate cut of the year. Last week's currency volatility was unusually high, driven by expectations of the US easing, decisions from the Bank of New Zealand, the UK budget, and also speculation over the yen intervention. Thin liquidity around the Thanksgiving holiday also amplified these swings. The dollar suffered its largest weekly drop since July, while currencies like pound and New Zealand dollar outperformed. Markets also monitored potential euro support from Ukraine peace talks and also ongoing pressure on the Korean won. And technically, the dollar remains under pressure, staying below 200-day average at 99.64 and also 9-day average at 99.84 keeps the bias bearish. A firm break below 99.06 and also the 99 psychological level could open the way to 98.65. And bulls need to reclaim 100 to revive the momentum. Moving to WTI crude oil, the oil traded around $59.4 with gains capped by the hopes of Russia-Ukraine peace agreement and also continued concerns over the oversupply. US oil production rose again in September to a record of 13.84 million barrels per day, deepening worries about a market glut heading into 2025. Peace talks headlines remain a major driver. Early optimism pushed crude sharply lower last week, though prices have stabilized as negotiations slowed. Despite supportive refining margins in parts of Asia, expectations of a global surplus have dominated the sentiment. Both Brent and WTI have now fallen for four straight months, their longest losing streak since 2023. And technically, WTI is consolidating around the key $60 level. Momentum remains muted, with the MACD showing weak upward strength and also RSI around 48. In the near term, resistance stands at 60 and also 62.38, while support remains at 58 and 57, the November low. Next, spot gold. Gold continued its rebound on Monday, reaching highs near $42.62 per ounce, which is its strongest since late October. Precious metals have rallied broadly this month as expectations for a December Fed rate cut increased. Dovish comments from Fed officials and also weaker than expected post shutdown data has strengthened the confidence that easing is likely. Gold has also benefited from geopolitical uncertainty, with the latest US Ukraine discussions adding to safe haven demand. However, physical demand in Asia remains soft as high prices limit the buying, even during the India's wedding season. And technically, gold has broken out of its recent 4,000 to 4180 consolidation zone. The 4175 to 4180 region has now become strong support. Holding about 4200 opens the door to 4300 and potentially 4350, with the record high of 4381 also back in view. Support levels remain at 4180 and then 4150. And last but not least, the Australian dollar. The Aussie dollar traded around 65 cents after the soft Chinese PMI data over the weekend, but also downside has been limited. Despite China's manufacturing and services PMIs leaping deeper into the contraction, policy support measures and easing trade tensions helped to stabilize sentiment. And domestically, the reduced likelihood of further RBA easing continues to support the Australian dollar. Deputy Governor Sarah Hunter highlighted key uncertainties the RBA is reassessing, including pricing behavior, labor market tightness, and also the strong housing market response to policy shift. And November PMI data expanded for the 14th straight month, adding to the signs of resilience. The markets now turn to Wednesday's full monthly CPI release. And technically, the pair remains constructive. A firm break above 65 cents keep upside potential intact towards 66 cents. A momentum remains moderate with RSI near 56 and also ADX around 13. A key support lies at the 200-day average at 64.64 and also 64.14. So that concludes today's morning review. We'll continue to monitor Fed expectations and developments in the Eastern Europe and also Australia CPI data. So trade safe, and I will see you soon.